I'll begin with a summary of the financial performance for the quarter ended December 2017 for the standalone business. On a comparable basis, net sales at rupees 1,366 crore grew by 20.2% over the same quarter last year, with underlying volume and mix growth at 22%. This was driven by a 23% growth in sales volume and mix of consumer and bazaar products and 18% growth in sales volume and mix of industrial products. EBITDA before non-operating income at rupees 359 crore is higher by 28.9% over the same quarter last year. Profit after tax during the current quarter is at rupees 239 crore and increased by 17% over the same quarter last year. Now I'll move over to a summary of the consolidated performance for the quarter. On a comparable basis, net sales at rupees 1,533 crore grew by 17.3% over the same quarter last year. This excludes the sales of Cyclo division of Pidilite USA, which was sold by Pidilite USA in June 2017. EBITDA before non-operating income stood at rupees 372 crore for the quarter and grew by 28% over the same quarter last year. Profit after tax during the current quarter is at rupees 239 crore and increased by 18% over the same quarter last year. In a steadily improving economic environment, we have delivered strong overall performance. This quarter saw robust, broad-based volume and mix growth across our categories. While there are signs of commodity cost inflation, we remain committed to driving profitable volume growth. We can now open the floor for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avi Mehta from IIFL. Please go ahead.
Hi sir, congratulations on the great volume growth performance. My first question was on sales. Now we've seen 2 quarters of very encouraging sales growth, volume-led sales growth, if I may say. Would you, last quarter you were a little hesitant in calling out a recovery. Would you now say that it kind of makes you increasingly confident the demand is recovering?
If you look at the performance, I think the second quarter sales growth was also partially due to low growth in the first quarter. Our sales had declined in the Q1 because of GST.
Yes.
So second quarter growth was partially aided by recovery from that. And in quarter 3 of this year, we have a lower base of last year. Having said that, we see steady improvement in economic condition. Most of our product categories have performed well. So we clearly do see improvement in economic scenario. However, we need to see for a couple of more quarters before we can make any statement like this.
Oh, so you still you still believe it's, but the medium-term target is there, but you're still cautious, is what I should kind of take away, sir?
We continue to be cautiously optimistic.
Okay. And so what was the reason then for the pickup in this quarter? It was more a base effect is what you're guiding, or was there another?
It's a mix of both. If you still look, last year, clearly because of demonetization, the base was fairly less. So lower base of last year did help us, without a doubt. However, we see improvement in economic situation. As Ganesh said in his opening statement, we see steady improvement in economic condition, and that has also helped the growth. So it's a combination of both.
Okay, sir. And so secondly, was on the, just a clarification on the subsidiary. You have said that there is an issue with the ICA growth rate because of some reclassification issue with the authorities. Could you just clarify what that means? And second, would the growth rate for Nina and Percept that we see headline, is that a like-to-like net sales growth, or is it gross to net because of the reclassification of indirect taxes?
So to answer the question on ICA Pidilite, in one of the products we had a classification issue in terms of under which chapter it should be classified, and because of that, what kind of GST should be paid. And because of that difference, for some days we stopped our operation till we get adequate clarification on that. So while that matter, we still have a dispute with the concerned authority, and we are contesting the stand that they have taken. However, in the meanwhile, the business has started, so that is caused some disruption during the last fortnight of the quarter.
And the business has started at our belief rate, or are you doing it at the?
No, currently we have to do under that rate, but under protest. So that is what we have done, and we will continue to contest and see where that goes.
Okay, and Ganesh sir, if you could kind of just clarify on whether it's a like-to-like sales growth in subsidiary.
No, like-to-like basis.
They are net sales to net sales, right? It's not gross and net because of the classification of indirect taxes. Okay, I'll come back in the queue for a remaining question. Thank you very much.
Thank you. The next question is from the line of Gunjan Pratyani from JP Morgan. Please go ahead.
Yeah, thanks, sir, for taking my question. Just two questions. Firstly, would it be possible for you to give us a little bit more color on the growth? Because you clearly seem to be suggesting that the environment is improving. But if you can share more color, whether it is you're seeing it in the adhesive segment or you're seeing water, the construction chemical, waterproofing segment picking up now, any color? And secondly, if you could share the VAM prices and the trend that you're seeing in the current month.
So Gunjan, on the first question, we have seen good growth across most product categories, adhesives and sealants and construction chemical included. So we have seen a fairly broad-based good growth across most of the product categories. As we always do, I won't be able to give you exact growth figures for each of the category, but I can tell you that most of our product categories have grown well during the quarter. As far as price of VAM goes, the price of VAM in the last quarter, the consumption rate was about $975, which in the second quarter was $920. So from $920 in the quarter ended September, it increased to $975 in the third quarter. But I would also like to add that, because of some appreciation in the Indian rupee, it has partially mitigated the impact of this increase.
And what is it currently? Is it in the same range or has it appreciated further?
I think it has slightly appreciated further from this. It is at around $1,000 level.
And those supply shutdowns which you had mentioned in the September quarter, are those now stabilized? Are they back into operations for VAM?
No, VAM, the supply situation has improved. So, if the significant shutdown which was linked to Houston and all, that situation has improved from there. So now, the supply situation has clearly improved from there. But at the same time, there has been a good appreciation in crude, and that has kept the prices high.
Okay. And on the ad spends, if you can give a sense, because last quarter it was lower, right?
Yeah.
Ad spends and price hikes which you've taken in this quarter.
Yeah, Ganesh. So what was the ad spend in the quarter? Just 1 second.
Yeah, ad spend during the quarter was about 50 crores.
What percent of net?
And this is about 3.6% of sales.
By this ad, he means advertising and sales promotion expense.
Okay.
So it's about 3.6% of net sales, and our range is typically our normal range is between 3.5 to 4% of net sales. It was unusually low in the second quarter, but during this quarter the spend has been normal between 3.5 to 4%. And on a full year basis, our aim is to have a spend in that range.
Okay, got it. And did you take any price hikes during the quarter?
So we have taken price hike in few products where there has been a significant increase in input cost. So So in some products, the raw material cost increase has been high. One example of that is the product which are solvent-based, rubber-based adhesives, where the cost of rubber has significantly increased. So there have been some price increase in this product during the year.
The quantum of that would be?
The quantum of that would be, I think between 5 to 10%.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Rohit Kadam from Credit Suisse. Please go ahead.
Hi, sir. Thanks for taking my question. So coming to your gross margins, so both the crude and VAM are kind of up sharply over the last 6 months, and so I'm kind of looking at our gross margins which are flat. So how do we understand this? And I don't see any major pricing involved because your volume growth is still ahead of your value growth. So how do we then look at your margins, gross margins going ahead, given the current input cost inflation?
Sorry, can you just repeat the question? Sorry, I think we didn't hear properly.
Sure, no problem. So I was saying on the gross margins, despite crude and VAM inflation over the last 6 months or so, our gross margins are flat on a YOY basis for the first half this year. So how should we understand this? Because one would imagine that your RM costs as a percentage of sales should have inched up by now.
Correct. So there are a couple of factors. One factor is clearly sales mix. Our domestic consumer and bazaar business has better gross margin than rest of the business, and that business has done much better, as you can see from the segment accounts. And even within the segment accounts of consumer and bazaar, our domestic business has done better. So that is one factor. Second, there is slight factor in terms of the actual gross margin do not get fully reflected because after introduction of GST, there is a change in reporting compared to past. For example, in trading product earlier, the excise was built into the price and in the cost, while now because of GST, it is excluded from both cost and the selling price. So there are some minor difference in reporting of certain products like that, which has also had some impact. But on a comparable basis, if you were to clean all that up, the gross margin may have deteriorated by around 1%. And yes, and partially, the rupee appreciation has mitigated some of the impact of increase in VAM and crude cost.
Okay, got it. So that's helpful. So one more question. So on the waterproofing side, a business which is sort of more linked to housing construction kind of demand. So any trends you want to call out there? Because even when I look at your Percept plus Nina together, they have sort of this year grown at 20% plus with a margin expansion. So is the Dr. Fixit portfolio also showing some solid signs of turnaround?
As I answered earlier to question from Gunjan, our waterproofing business has had good growth rate in the third quarter. Overall, we see in construction segment some of the new construction, especially in larger city, continues to be under some kind of stress. However, in India, the construction is very broad activity, a lot of single-story construction, a lot of construction in smaller towns. That is doing a little better. So new construction in bigger town has some stress. However, overall situation appears to be improving along with other improvement in economy. As far as Nina and Percept goes, both of them have a small base, and some of the growth is also because of the initiative that we have taken, to improve our presence in the market. So Nina and Percept's growth cannot be linked to the growth in that sector.
Got it, sir. Thank you. That's very helpful.
Thank you. The next question is from the line of Anshuman Atri from Haitong Securities. Please go ahead.
Yeah, thank you for the opportunity. So my question is related to the service portfolio, which is Dr. Fixit, Nina, Percept. So given that Pidilite is a market leader, so what are the initiatives being taken to ensure that the usage increases both in the Tier 1 and Tier 2, 3 cities? And how do you see this whole market growing, say, in the next 1 to 2 years?
So I will answer it separately for our waterproofing business and then for our servicing business. Our waterproofing business, the main focus is to increase the awareness of our products. The consumption of this product is through retail channel and happens across India in bigger town, also good consumption in smaller town. So our whole focus here is to educate contractor, educate applicator, educate homeowners So there is a greater consumption of waterproofing chemical in retail channel. We have also done a significant advertising campaign with Amitabh Bachchan over last year or so. That has also had a positive impact. So we have taken several initiatives in terms of distribution, in terms of brand building, in terms of below the line activities. So all these activities are towards increasing the sale of waterproofing products through the retail channel. So this is the Dr. Fix-It business. As far as Nina and Percept goes, they are service companies and they are largely currently targeting the large builder segment, as well as, offices, some infrastructure projects. So that is a very different dynamics. There, as I said earlier, there is still some stress in the large builder segment. However, we are making a lot of effort to increase our share or presence in this market. So we are doing a lot of business development activity, and we are trying to convert a lot of users to our product and our services. So that has helped in the growth of Nina and Percept.
Okay, sir. So the second question is regarding the raw materials. So we had seen, hello?
Yeah, go ahead, please.
Yeah. In the raw materials, we had also seen some disruption because of these Chinese winter cuts. So these will end in March. So do you expect the monomer other supplies to improve and prices to cool off if assuming crude does not move up further significantly?
We do not like to, predict this thing. There are a lot of factors at play. There was a lot of difficulty because of the crisis in Houston. That situation is improving, but a lot of factors are at play, including crude prices, including demand and supply scenarios. Sometimes shutdown can happen at a supplier. So we would not like to predict what would happen to raw material prices. However, we have, whenever there is a need, whenever we feel that there is an increase in raw material prices which is significant and over a longer period of time, we have been able to pass on these increases.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Kishore Kumar from Karvi Stock Broking. Please go ahead.
Thanks for giving this opportunity. Sir, I have a few questions. One is, I just want to know the volume growth of consumer and bazaar product consolidated basis Y&Y and industrial product.
So consumer and bazaar product, as we covered in our opening statement, there is a 23% growth in volume and mix of consumer and bazaar product, and 18% growth in volume and mix of industrial product for the quarter.
So is that on a consolidated basis?
This is on standalone basis. Our standalone is significant, so this is on the standalone basis.
Okay. And second question related to industrial product only. So in that, could you give some sense on competitor, like who and all are the major competitor on industrial products in India?
In industrial product, we have several product segments and several industry segments, and there are different competitors in each. So in our organic pigment business, we have competition from players like Sudarshan, Clariant, Make Money, and others. In our industrial adhesive, there are a different set of competition, including companies like Henkel. Our industrial resin business also has competition from many multinational as well as some small and medium-sized Indian companies. So our industrial business is composed of several different product segments and end-user segments, and each one of them has some larger or multinational type competitors and some medium and small competitors.
Okay. Actually, I have two more questions. If you allow, so can I ask?
Go ahead.
Yeah. Actually, one is guidance on taxes, because we are seeing here in quarter 3, like in this three quarters, they are around 31 to 33%. So what is your guidance on tax rate? Second is there any capex plan for upcoming years?
So our 9-month tax rate is about 32. So
Yes.
for the full year, we expect our tax rate to be in that range. As far as capex, yes, we have capex plan. We have a regular capex plan, both in terms of increasing our capacity, setting up new manufacturing plants. So capex is a continuous process. for a growing company. So we have normal capex for every single year.
Okay. Thank you, sir.
Thank you. The next question is from the line of Aditya Makharia from Motilal Oswal Asset Management. Please go ahead.
Yes, sir. You have multiple distribution channels for your various products. I was just wondering how much of your products are sold through the paint channel, if you were to take that as a percentage of your overall sales.
In paint, there are two types of outlets. Pure paint outlets where we will have very little sales, and then there is a paint hardware where we have reasonable amount of sales. But overall, at a company level, it's not a very significant figure.
Okay.
Thank you. The next question is from the line of Nitin Pasin from Ambit Capital. Please go ahead.
Sir, you mentioned in the earnings release that you acquired a small company also during, or approved on the 5th of January. Could you just help us understand, where does this go? Does it go into consumer and bazaar? And is it like a new product altogether, or is it related to some existing products, etc.? If you could just explain us this business and selling mechanism.
This is a company called CP. Our acquisition, we are hopeful of completing by end of February, where we will have a 70% stake in that company. There are certain condition precedent and other procedural matters which are going on right now, but we are hopeful to conclude the acquisition by end of February. Now, CP is a good, interesting and innovative company. They have a good portfolio of products, including polyurethane, polyurea, epoxy. It is in a segment called floor coating.
Okay.
And these floor coatings are used in industries like factories. They are used in hospital and healthcare kind of environment, and they also have application in buildings and malls and other places. So these are basically coatings which are applied on the floor, and it has several properties which are required in some of these kind of application which I just said earlier. So they have very good product technology. Some of the technology, they are fairly good in the Indian market, and this is similar in a way to Nina and Percept type of a segment, where this is something where our consumers would be industrial units, healthcare facilities, and builders or the construction segment.
Okay. And sir, would this be like a product sales or a service sales sort of a mechanism?
It would be product sales, some service. They also do some project on apply where they take up the whole application job, as well as they sell product to other applicators.
Okay. And any size indication is like under 50 crores or under 100 crore rupees of top line?
It's around 100 crores. We have given that detail in the release that we give at the time of acquisition. The top line is around 100 crores.
Okay. And can it go to 100%, or the 30% will remain with the existing promoters and they will be the existing management?
So currently they will continue to be the existing managers. They will hold 30%. The managing director of that company, he will continue with us. He will ensure that we have good transition and we grow. He's a very capable person. He has started this company and brought it to this level. So he will continue to be with us in this capacity.
Okay. And second question would be around the change in the entire logistics or market reach strategy given the GST. So now with about 6 months, 7 months behind and all this changes going on, any meaningful changes in the entire distribution network, if you could just take us through, or key changes that have been made?
As far as our own network goes in terms of manufacturing and warehousing, we may make some changes, but that is under the final plan is under development. Once we are ready with it, we will roll it out.
Okay.
Clearly, there would be some changes, and we are about to formulate, and then we'll move forward with implementation.
Okay. So basically, the internal changes, not the market changes in terms like the wholesalers or distributors or retail points, etc. All that is not to be that much, but your internal changes are yet pending.
All that is part of process. For example, expanding our reach or increasing our distribution are important initiative, and with or without GST, those are important things.
Okay. And so the last question would be, in terms of the international businesses, where do you see the next 6 months or 9 months sort of a little bit more headwinds continuing, or which businesses could improve? Just take us through some near-term outlook on the overseas performance.
So in Middle East, in our international business, our focus is primarily on SAARC, which is Bangladesh and Sri Lanka. These are both very good businesses, and both have good market position in respective countries. So we expect in medium to long term our units in Bangladesh and Sri Lanka to perform well and to grow at good pace. In addition to that, our focus is also in Middle East and Africa. We need to get some of the things right, but these are important markets for us. The markets have some similarity to India, and we have now got several years of experience in this market. So we also plan to continue to focus on that. We need to do some work. We need to get some things right, but these are also good opportunities for us.
Okay. So that was, because one of the key segments is the others. And if you see the others, EBITDA has turned from a loss of about 1 crore to about 6 crores this year. So, is it like operating at one of its best numbers right now, or is it others just a balancing figure here?
No, it's not very significant. It is some one-off sale. So I think others you should not give too much importance to.
Okay. I'll come back in the queue if there are no more questions and if I get a chance. Thank you.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Kuldeep Gangwar from ASK Investments. Please go ahead.
Yes, sir. Thanks for taking my questions. Like a small one, why the employee cost growth had been relatively lower? Any particular reason, like only 7% in standalone over there?
No particular reason. It could be due to some provision related thing, but no particular reason. I think you should not really look too much into quarterly number for staff cost. The year-to-date number is more reflective.
Okay. And in console other operating expenses, is it because of the divestment you had done, or like it had grown only on 8% or so?
Which number are you?
Can you repeat the question?
Other operating expenses in console. Other expenditures.
And what is the question on that?
Like the growth had been 8% YY, vis-a-vis in standalone it had been close to 20%. So.
We'll come back to you.
And these expenses are not necessarily directly proportional to sales. So if you look at growth for 9 months, it's actually even lower. Given that the sales growth for the quarter has been significant, which is why you're seeing some amount of uptick here as well.
No, for 9 months, if you see standalone is 640 to 674, and for consolidated is 803 and 811. So it is not significantly different.
So it's basically a timing issue, you're saying?
It's a timing. It's not significant. No, if you look at the difference, is 24 crore in standalone and some 9-10 crore in console. So it's not a significant difference.
And they're not directly proportional to sales.
Okay, got it. Thanks a lot.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi sir, thanks for the opportunity. Sir, if I look at your last 4-5 years number.
Mr. Tejas sir, may we request to use a handset, please? We are unable to hear you clearly.
Is this better?
Yeah, thank you.
Yeah, thank you. Hi sir. If I look at your last 4-5 years number, there used to be a trend that we used to deliver our best quarter in the first quarter, and then it used to gradually decelerate. But somehow that has not happened this year so far. So is it because of all the disruptions that we had this year, or because of all the changes and acquisitions that we have done and launches, the seasonality part of the portfolio is coming down over a period of time?
No, it's absolutely because of GST. The first quarter this year could not have been largest because of GST. Due to the implementation of GST from 1st of July, in June we had inventory correction at channel partner. And we had decline in sale year on year during the first quarter. So this is the reason this year our first quarter is not the largest quarter.
Okay. So even all this, even after all these launches and the acquisitions that we have done, the first quarter bias will still remain in the number. Is that correct understanding?
No, it has nothing to do with launches or acquisition. The first quarter bias has nothing to do with that. Generally, in our case, if the trade reduces their inventory towards the end of the year, we don't like to push stock or anything. So there is some inventory correction which happens towards March end. So that has some favorable impact in the first quarter. Also for some of our businesses like waterproofing or some of the other products which are school-based, there is some amount of seasonality. The sale normally goes up.
Yeah.
So there is some favorable seasonality to some extent, not a very huge impact, but to some impact in the first quarter. And also there is a benefit of some channel inventory correction, which then, comes back to normal level during the first quarter. So these are the two factors.
Sure, this helps, sir. So second, sir, if I go back to your commentary 2-3 quarters back, we clearly stated out that our first priority would be to revert back to 15% kind of growth trajectory. And if need be, we are willing to sacrifice margins for that. So just wanted to know our thought on the trade-off between growth and margins, how it stands today on that point.
No, our thought continues to remain the same. It is important for us to achieve a good top line growth while operating in a margin band which we are comfortable with. As I have shared earlier, both are from a gross margin or a net margin point of view, we like to operate within a band. So within that band, some correction can happen, but otherwise, the objective is to accelerate growth while remaining within a particular gross margin band that we are comfortable with. And that thought still continues.
So in that balance, would this quarter's margin be at the upper end of that band or?
Yes, sir. This quarter margin is at a comfortable. I would not call it at the upper end of it, but but this margin is comfortable. It is within that band towards the upper end.
And so, lastly, if you can help us understand that, I'm pretty sure that there are a lot of competing opportunities for the capital. So in that scenario, why we went for the buyback? Just wanted to understand the rationale for the buyback.
There is no competing situation of capital for us. We as a company have good cash accrual, good cash flow. We generate significant cash, and we make sure that the cash, the proper cash request of each business is properly funded. So wherever we see that there is a good use of capital, those businesses do get the capital that they need. Our growth is not constrained by the need for capital. However, as a company, we are generating adequate cash. And once you generate enough cash, we have to consider giving it back to the shareholder as one of the options. So, the board deliberated on our cash position. The board felt that, this is an amount which comfortably we can give back to the shareholder.
Sure. And sir, just one clarification. Are promoters going to participate in this buyback or that won't be the case?
Promoters do intend to participate in the buyback.
Okay. Thanks a lot, sir, and all the best.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Avi Mehta from IIFL. Please go ahead.
Hi, sir. So I just wanted to kind of get a check on how the inventory levels in the channel have behaved, because you had said that the wholesale inventory level remains in the end of the second quarter. You had kind of highlighted that remains under pressure. Has that gone off? Is it back to the pre-GST levels?
See, these wholesalers are not, we don't have an exact, whatever information I give you will be more based on a feel, because we do not have the actual figure of the inventory that the wholesaler carries. They are independent entities. However, it has improved. In the first quarter after GST, the inventory level had significantly corrected, and there is some improvement from those levels.
Okay. There has been some kind of pickup or improvement from that level. Okay.
Some improvement is there, yes.
Okay. And sir, secondly is, on the VAM pricing, you said that this quarter was about 975. I recollect that even the last quarter we had indicated 1,000 kind of mark. So is this like a typical volatility that happens? We are seeing up and down movement. It's not a kind of structural movement upwards. Would that be a fair understanding? At least last quarter, that is how it was?
No, last quarter means in Q2, our average consumption rate was about $920 or so, which has moved up to about $975.
So yeah, but you had said that end of September was about 1,000. That's what you had said. So I thought that's why I was just trying to understand. It's that range is where it kind of.
Just 1 second. Ganesh will clarify.
Yeah. So I guess you are referring to the procurement price. So what's the current prevailing price? Because what comes into consumption is also the stocks which you're holding.
Okay, fair enough. So this is the procurement. Okay, that helps clarify it. Okay, sir. Thank you very much. That's all from my side.
Thank you. Reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. The next question from the line of Anubhav Sahu from Money Control. Please go ahead.
Hello, sir. Thanks for taking my question. I had a specific question regarding sourcing of vinyl acetate monomer. So basically, I want to understand the supply dynamics of it and how much China contribute to this market and what are our tie-ups with these sourcing partners.
So there are several manufacturers of vinyl acetate monomer in the world, and we work with most of those suppliers. The suppliers are in China, Singapore, and even in Europe. And we work. We are in touch with most of the suppliers, and the sourcing or the availability of VAM has never been an issue.
Right. And so what percentage would be imported? Is 100% or a part of it is domestically procured as well?
All the VAM which comes into India is imported.
Mm-hmm.
So it is all. There is no VAM which is manufactured in India now.
Okay. And what percentage globally, as far as the VAM market is concerned, how much the China would be having a share? Any?
I don't have that figure with me.
Okay. Okay. And so regarding the types with the supply partners, so what kind of pricing arrangement do we have? Generally, is it a monthly reset which happens with the pricing thing, or how does it go?
There is no long-term contract of VAM prices. The VAM prices keep on fluctuating, and we don't have any long-term price contract because it can go either way.
Mm-hmm.
So we buy from them on a month-to-month basis, but we have deep relationship with all suppliers.
Okay.
And sourcing of VAM has not been a problem.
Okay. Thanks a lot, sir. Thank you.
Thank you. Next question is on the line of Prasad Deshmukh from Bank of America. Please go ahead.
Yeah, hi. Good evening. 2 questions. Firstly, if the raw material prices keep going up, other than price increase, are there any offsetting cost initiatives that you guys are taking up, where without taking price increase, probably things can be balanced?
Yes, as a company, we are taking a deeper look at cost. We have hired Accenture as a consultant. They are doing a project for last 6 months or so. So we are looking at all of our expenses in terms of manufacturing and related expenditure. And there is always room to cut expenses to mitigate some of this cost. So we are working towards it.
Are there any targets, in-house targets?
There are in-house targets, but I would not like to share it. But we are focused on a particular target and trying to achieve that.
And the source of the cost savings, or it's like across the board?
In all area, right from the change in the design of some of the packaging material, to change in the manufacturing process, to think of it's a broad-based project.
Correct.
And Accenture has deep experience in this, so they are looking at all the cost factors and trying to identify savings.
Sure. And second question, in the adhesives market, are you seeing any signs of market consolidation? Organized to unorganized to organized?
I think it's too early to say like that. The players still exist. They are still operating in the market, and I think it would be too early to talk about any consolidation.
So would they also have grown at a similar? Obviously you may or may not know, but would they also, in your opinion, would they also have grown at a similar?
I would not like to give opinion about what could have been the growth of other players in the market.
Okay. Thanks a lot.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and one. The next question is from the line of Mayank Bansal as an individual investor. Please go ahead.
Hello, sir. My question is, so what is the reason for the weak overseas performance?
Can you just, your question is, what is the reason for weak overseas performance?
Yes, sir. Yes, sir.
See, we have given, if you, there are different factors in subsidiaries which have underperformed, and the details of that are on our website in our investor letter.
Okay.
So that can give you an idea. There are different factors, like for example, in Brazil, the economic situation still continues to be weak. That has had some impact. In our Bangladesh and Sri Lanka subsidiary, while their top line growth has been good, and we believe they are very good potential markets for future, we are investing in those markets, so the SGA cost has gone up and has had some impact on EBITDA.
Okay, so are we gaining market share in this market, or is this due to overall economic condition? This downturn is due to overall.
So our international market, we have to break up. Within that market, in Bangladesh and Sri Lanka, we are performing well. In Bangladesh and Sri Lanka, we have very good business, very good brands, and we are systematically growing in those markets. Quarter to quarter performance can sometimes not be in line with that. However, these are the markets where we are making good progress with our brand, with our infrastructure, manufacturing, etc. So in those markets, the situation is very different than a market like Brazil, where economic condition has been uncertain. But however, in Brazil, our focus has been to eliminate losses. And if you see from last 2 years now, we are not incurring any losses in that market. In USA, we had a business which had very high growth for 2-3 years, but there the trend has changed of adult coloring market, and then hence there has been a sales correction. So all markets are very different, but I think our key focus in international market is in the SAARC region and SAARC, Middle East and Africa, and in each of those markets we are making some progress, and the results will follow.
Thank you, sir.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and one. Reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and one. The next question is from the line of Nitin Basin from Ambit Capital. Please go ahead.
Yeah. Sir, if you look at the last 2 quarters, especially this quarter, the kind of revenue growth that you've posted roughly at about 20%. But if you look at the 9-month number, because you also said, one should look at little longer dates, also 9-10%. So, whilst this quarter could be looking good because of last year and otherwise, now when you speak to your marketing team, what sense are we getting? Are we going to be more easily closer to about 15-16% growth for the next year or so? Or we are saying that this 20% could actually be maintained for at least 1 more year before the base effect comes into play?
So Nitin, we don't talk like that with our marketing, and I cannot share any kind of guidance in terms of what do we see as growth rate in next quarter and all of that.
Sure.
But as I said earlier, we do see steady improvement in economic scenario. However, we need to see couple of more quarters before we get a sense of what would be the new normal growth rates.
Okay. Sure. And in terms of the product launches, is there any way to get a sense that new product launches in the last 1 year or 2 years, what sort of a proportion is that becoming now of your top line? Any sense on that? Because I know that you keep on launching new products, but any sense for all of us?
Again, that percentage, we do not share in general, but I'll give you a good qualitative idea. We had launched a couple of products in Fevicol division. One is called Hyper, which is a very new next generation kind of an adhesive, which minimizes the formation of bubble while doing woodworking. So that product has had very good response and it is contributing well to our business. There is another product called Fevicol Heatex, which is again an adhesive which sets very fast. That again has had good response. So that way, in all our businesses, we have done new launches and some of them has had good response.
Okay. But sir, Fevicol, these products are like extensions of the existing brand of Fevicol. Application becomes even more specific and more technical. Something which altogether new, like something I was reading about it that you have launched some roof insulation products or something of those lines. Any sense on such new generation products?
No, that is also a product which is a part of construction chemical segment. In construction chemical segment, there are different products with different applications. So it is one of our newer products, but that product will take time. Typically in construction chemical, gestation period is very long because, you have to change the habits of consumer.
Okay. Get the perspective. Thank you.
Right.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Arun Baid from BOB Capital. Please go ahead.
Hello, sir. Historically, you had always been saying that, the margins are very difficult to sustain. Now the tone which I think is that these margins are sustainable. Is my reading correct, sir?
I don't think I have said that our margins are sustainable. Yes, you are right. They have sustained despite us saying they may not sustain. But we are at a higher margin band of what we have. But margin depends on number of factors. Means EBITDA margin depends on number of factors, and the primary factor is the sales growth that we get. So if there is a robust sales growth, then you are able to have a better EBITDA margin despite some erosion in gross margin. So we still maintain that our gross margin and EBITDA margin are fairly high towards the upper end of what we have ever had, and hence some correction is possible. And as we have shared earlier, our primary objective is to accelerate sales growth, but while operating within a certain gross margin and EBITDA margin band.
Okay, sir. If I ask the question in a different way, assuming your medium-term guidance of that 15% which you're looking at stays, then because you'll have the volume growth there, obviously for sure, then whether these margins are going to be broadly in this range?
No, but first of all, that is not our guidance. 15% is what we try to achieve. It is not a guidance, so I want to clarify that.
Yes,
our targeted growth rate is our historic growth rate of 15%. So that is what we always say, we aspire or we desire to get back to those kind of growth rates which we have achieved over a 10-year period. Number one. Second thing is, again, it's very, very difficult to predict or project our margins on a quarter-to-quarter kind of a basis. What we like to do is we want to, as I have said earlier, our aim is to accelerate our top line growth while operating in a comfortable EBITDA margin range that we as a company are comfortable. We have always had good margins. Our EBITDA margins are possibly better than most of our peers, and hence we want to continue to operate at a good EBITDA margin and accelerate sales growth. But our current EBITDA and gross margins are towards the higher end of our band.
So sorry if I had missed that thing. What is the band? If you can give some broad indication.
The band, we are more comfortable with an EBITDA margin of about 21-22%. Currently, we are at about 25%, correct? Yes.
25-26.
We are currently at about 25-26%. 21, 22, 23 is a kind of range that we are more comfortable.
Okay. Thank you very much, sir. This was helpful.
Thank you. The next question is from the line of Kuldeep Gangwar from ASK Investments. Please go ahead. Kuldeep, your line is unmuted for question. Please go ahead. Kuldeep, your line is unmuted for questions. If you have muted your line, please unmute.
Yeah. So, in consumer and Bazaar product segment, at industry level, what would be the share of unorganized players, both in volume and value terms? Any estimate regarding that?
You're saying entire consumer and bazaar as a segment?
So overall market, what would be the unorganized players accounting for? Yeah, overall industry level.
If you to look at entire consumer, again, very, very difficult to predict. We don't have a fair or a good estimate on that. But it could be in the region of, say, 25-30%. Again, it's difficult to define what is unorganized. There are smaller players,
okay,
and then there are completely unorganized. So it's difficult to estimate.
So if just smaller players and completely unorganized put together, in value terms, you're saying 25-30% or volume terms?
Could be. When you look at entire consumer and bazaar as a segment.
Both volume and value, you are saying close to 25%.
It's difficult to say what volume and what value. It could be in the range of 30-40% kind of a range.
Okay, sure.
If you count all small player and unorganized players.
Sure thing. So second question is regarding your volume growth. So what is the most important driver for your business? Whether it's increasing the distribution reach or increasing the number of products on a particular dealer level?
No, they both are not the main drivers. The main drivers cannot be just distribution and making our product available. That is not generally the growth driver. Growth driver has multiple elements in terms of how is the economic scenario, how is each end user segment of ours, how is the consumption in that, how is the overall macroeconomic scenario, how are our other factors related to our advertising, brand building, new product, innovation. Lot of those factors are more important than just distribution and making our products available on the shelf.
Okay, sure. Thanks a lot.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments. Thank you, and over to you.
Thank you, everybody, for participating in the call. Thank you, and have a good weekend.
Thank you very much. Ladies and gentlemen, on behalf of Motilal Oswal Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.